Welcome everybody, and today we are going to discuss the chapter Advanced Tax. Hey, it's a very small chapter, so all concepts I'll complete in this video itself in the next 40 minutes. Okay, so let's concentrate, understand, and if question comes, around 4 marks question will come, and easy to solve question will come. Okay, so that's why I believe that you should completely concentrate and understand this chapter. Okay, what government wants? Government basically wants that you should pay the tax which you are actually liable to pay. And you should not only pay the tax, but pay the tax in time. No, not only in time. If you pay in advance, that would be perfectly fine for the government. Okay. So what government is planning that as you earn, so you pay the tax. If you do this, government is very happy. And that's why they brought this chapter. Now, you may be a resident, you may be a non-resident, you may be a citizen, you may be not citizen. Any assessee, this chapter will apply. Or can I say, this chapter applies to all assessees, whether you are resident or not, citizen or not. The second condition is very important. Your advance tax liability. So here a lot of shortcuts we used, so don't get confused. I'll tell the full form of it. ATL means advance tax liability is more than 10,000 rupees. So if your advance tax liability is more than 10,000 rupees, then you have to compulsorily pay advance tax. Suppose your advance tax liability is 3,000, then government says, "Arey chodo yaar, leave it." Right? You pay tax when finally you are required to. But if your advance tax liability is 10,000 rupees or more, then definitely you have to pay advance tax. Now, what is advance tax? I'll tell you the meaning. Generally, you earn income in the previous year, correct? You earn income in the previous year. And for that, you pay tax and do final settlement of tax along with filing returns in the assessment year. So you earn income in the previous year and you finally pay the tax and file the return in the assessment year. So this is normal. But suppose if you earn income in the previous year and pay tax and file return in the assessment year, we call it as self-assessment tax. But suppose you pay before the assessment year starts. Suppose you pay the tax before the assessment year starts. That means 31st March of the previous year. Your previous year starts 1st April and ends on next year's 31st March. So if you pay the tax by 31st March of the previous year, then we can say you paid advance tax. Let me tell you with an example. For you, previous year is 2024-25 and assessment year is 25-26. Easy. Suppose in previous year 24-25 you earned income, for that you paid the tax in 25-26. Then it is perfectly normal and we call that payment of tax as self-assessment tax. But suppose you paid in advance, that is before the assessment year starts. That means for your previous year 2024-25, you paid the tax by 31st March 2025. That means before assessment year starts. Then you paid the tax in advance. We call it as advance tax. But you may get a question. Sir, how can we pay advance tax? We don't know how much is the income. Income tax is paid once income is earned, correct? Once you earn the income And how will I know what is my whole year's income tax and how can I pay advance? You may say like this, but at least if you don't know 100% correct what is your income, you can at least estimate your income, correct? And that's given in section 209. So first, estimate your income. Every year you earn income, correct? So you know how much you may earn next year also. So estimate your income. Also estimate your deductions under 80C to 80U. So your estimated gross total income, from that less deductions under section 80C to 80U, based on how many investments you want to do. You will get estimated total income. Now all this is estimated. Okay, very good. Once you get estimated total income, you have to calculate gross tax liability. Once you calculate your tax liability, you have to deduct rebate if it is applicable to you. Okay, and add surcharge if it is applicable to you. Right? If your income is super income, surcharge is applicable. Add that. And after adding surcharge, you will add health and education cess. So you get your tax liability. Once you get the tax liability, from that, on some incomes, there will be TDS, tax deducted at source. On some incomes, you may get rebate also. There are sections like 86 is a section where you get rebate. 89 is there where you get relief. So rebates are there, reliefs are there. You will deduct that, right? Double taxation reliefs are also there. That also you will deduct under section 90, 91, 92. So if you deduct the relief, if you deduct the rebate in tax, finally you will get the advance tax liability. Clear to all of you? I don't feel there should be any doubt. Let me repeat for all of you. We'll have at the start of the previous year itself. That means on 1st April 2024. Right? Your previous year starts. At that time only you will estimate. This year, this is my income. This is what I am going to earn. So your gross income, total income, you will determine. From that deductions, what you are going to invest, accordingly 80C to 80U, deductions you will deduct. You will get gross total, your estimated total income you will get. Once you get income, you will calculate your tax, gross tax liability. Then from the gross tax liability, if there is any discount, rebate, deduct it, surcharge, add it, health and education cess, add, you will get estimated final tax liability. Right? Okay. Now, from this tax liability, if there are some incomes on which TDS is to be deducted, rebate is to be given, reliefs you are going to get, deduct it. And finally, your advance tax liability comes. If this advance tax liability is more than 10,000, then you are supposed to compulsorily pay advance tax. When you are supposed to pay then? Okay, we understood how to compute advance tax. But when to pay? So are you an assessee covered under section 44 AD or 44 ADA? Are you filing the returns under presumptive taxation under 44 AD, 44 ADA? We already discussed this in PGBP chapter, correct? So then you have to pay advance tax in one installment only. That too when 15th March of the previous year. So your previous year is 2024-25. So obviously 15th March 2025. So pay your entire 100% of the advance tax by 15th March 2025. But suppose you are not covered under 44 AD, not filing return under 44 ADA, then what? Then you have to pay advance tax in 4 equal installments. 15th June, 15th September, 15th December, 15th March. So 15th June, 15th September, 15th December, 15th March. How much you should pay? They simply said that till 15th June, 15% of the tax. Till 15th September, 45% of the tax. Till 15th December, 75% of the tax. Till 15th March, 100% of the advance tax. So these are all advance tax answers. Let me tell you with a number. Suppose your advance tax liability after all these computations which I discussed, you got 1 lakh rupees. So till 15th June, how much you will pay? 1 lakh into 15%, 15,000 only. Okay. Then till 15th September, you will pay 45%. That means 1 lakh into 45%, 45,000. But on 15th September, you will pay 45,000. The answer is no. 45,000 you should definitely would have paid till 15th September. Already 15 paid, correct? On 15th June, right? So balance 30 if you pay, that's enough. You got 45,000. Okay, that's what they wanted to tell. Now till 15th December, 75% you should pay. So 1 lakh into 75%, 75,000 by December 15th you should have paid. But do you pay 75,000 on 15th December? No. Already 45,000 paid, na? So 75 minus 45, that 30,000 only you should pay. Okay, right. And till 15th March, 100% of the advance tax. So if your advance tax is 1 lakh, you have to pay 1 lakh till 15th March. Okay. So already 75 paid, na? Balance 25 if you pay, that's enough. Balance 25,000 if you pay, that's enough. This is how you should understand this computations. Otherwise, you will directly apply, I know. So that's why I took some number and explained to you. Now, some important points you should note. I already said the first point, that generally we earn income in the previous year and we pay the tax in the assessment year. But if you pay the tax for the previous year before the assessment year starts, then we call it as advance tax paid. So up to 100% of the advance tax should be paid by 15th March in both the cases, correct? Whether you are filing return under 44 ADA or under other sections, right? Other provisions. In both the cases or in all cases, till 15th March, you should pay 100% of the advance tax. But suppose there is a delay, no problem. Till 31st March of the previous year also, if you pay, we will treat it as advance tax only. Okay, that's what I explained earlier. That's what I am telling now. Now, do you want to trouble the senior citizens? Do you want to trouble the super senior citizens? Of course not, correct? That's why government said, okay, if they are senior citizen, if they are super senior citizen, and they don't have business income, if they don't have business income, then for them, no liability of advance tax. I'll tell you, reasons are there, logic is there, right? First logic is, if they don't have business income or professional income, then why should the senior citizens be troubled or asked to pay advance tax? Second part of the logic is, if they don't have business or professional income, all the taxes almost would be collected by TDS provisions only. So that's why bothering them with advance tax doesn't serve the purpose. Okay. For our exams, what we'll remember, if you are a senior citizen, if you are a super senior citizen, no advance tax liability if you don't have PGBP income. That's it, you should remember. Okay. But I said that at the start of the previous year, 1st April 2024, we will compute the estimated income. But suddenly COVID came. Will your estimate be same or will your estimate go down? Obviously it will go down. Suddenly you got a very big project and your income increased like a skyrocket. So your estimate will go up. You sold a property and you earned a capital gain income. Or you got dividend from a company which is much more than you expected. Suddenly you won a lottery. So many incomes may arise and your estimate may go wrong. What to do? No need to take any tension. You can re-estimate. What you can do? You can re-estimate your income. So your estimate will be again done and recompute your income and tax liability as I said in the pro forma. Now what to do? Simple. Whatever estimate comes, your advance tax liability minus whatever you paid. Okay, whatever advance tax liability came minus whatever you paid. Balance amount you pay in the balance installments. Okay, that's why they said 15th June 15%, 15th September up to 45%. So suppose in August month you got some extra income, what will you do? In August itself you will recompute your advance, your total income, your advance tax, all that, and minus whatever you paid in 15th June, you deduct, and up to 45% you will ensure that it is paid based on your revised estimate. Suppose example, your income increased after 15th March. What to do? Suppose some installments are left, you will adjust it in the installments and you will ensure that percentage is met. Right? Required percentage of tax you paid. But if suppose till 15th March also that extra income did not come. So why to worry? Till 31st March you pay, yaar. You have time, correct? That's what they try to explain. Now, should agriculture income be considered? The answer is yes. So if you are computing your advance tax liability, even net agricultural income should also be considered. Right? And how to compute the tax? You know agriculture income chapter. There we computed the tax in 3 steps. Similarly, we will compute the tax. Okay. But suppose if you don't pay advance tax. If you don't pay tax, you are a defaulter, correct? But if you don't pay advance tax, still you will be treated as a defaulter only. Assessee in default. If you did not pay the advance tax, you will be treated as assessee in default. Okay. So then if you are in default, what will happen? Then interest under section 234A, 234B, 234C, all that would be attracted. Okay. So if you are a defaulter, 234A section, 234B section, 234C section, interest will be applicable. Now I'll ask you one thing. Okay, if you are a defaulter, this will happen. Suppose you delayed in payment, you not only paid the advance tax, but also paid some interest, also paid some penalty. Let's assume. So your interest, your penalty is a punishment type of thing. So ignore that. But whatever advance tax you paid, whatever advance tax you paid, that will be used as a credit for final settlement of tax. So as we discussed that in the previous year you earn income, in assessment year you file return, you pay final settlement of tax. So when your final income is computed, your final tax is computed, from that TDS is deducted, TCS is deducted, and obviously advance tax also will be deducted. If still something left, you pay. If you already paid extra, you will get refund. Okay. So this 219 section you understood. Other than interest and penalty, any part of advance tax paid that can be used for payment of final settlement of tax. It can be used as a credit. That's what the language is. Okay. So whatever I said till now, same thing I am going to repeat now, but little from conceptual perspective. From computational perspective I did. Now conceptual perspective we'll discuss. How practically it happens in the industry, that's what we are going to discuss. See, देखो, determination of advance tax liability. Now, assessee on his own notion, he wants to actually compute his advance tax liability and pay. So at the time of first installment, what will happen? Obviously, all steps which I discussed will be applicable, right? You will estimate your gross total income. You will deduct deductions under the ATC to you, which you expect. You will get estimated total income. Then you will calculate estimated gross tax liability, deduct rebate if applicable, add surcharge if applicable, add health and education cess compulsorily. Correct? Once all this is done, deduct the TDS, TCS, rebates, reliefs if applicable, and finally you will get your advance tax liability. Now that advance tax liability, you based on the percentages, like I said, 15% till 15th June, 45% till 15th September, 75% till 15th December, 100% till 15th March. Divide how much payment should be made by what time, and accordingly, first installment you make the payment. Okay. Because you estimated at the start of the previous year, you will pay like this. But at the time of second installment or third installment or fourth installment, is there any revision in your estimated income? Is the big question. If suppose there is a revision, there is a change, then what to do? We'll discuss. But suppose if there is no revision, there is no change in your income, no change in tax, then simply pay the installment, that's it. But if there is a revision, then again redo all the computations, right? From your total income to tax to TDS to advance tax, everything recompute. And after recomputation, you calculate how much you are supposed to pay in balance installments. Okay. And whatever tax you already paid, deduct, and balance you pay in the balance installment. Let me tell you with an example. You estimated at the start of the year that your advance tax liability is 1 lakh. Correct? So you paid by 15th June. How much? Come on, tell me. How much? 15,000 rupees. Right? 15th September, you paid till 45,000. Up to 45,000 amount you paid. Till 15th December, you paid 75,000. Okay? January, you realize that your income is not 1 lakh, your advance tax liability is not 1 lakh, but it is 1 lakh 50,000 rupees. Now, what will happen? If 1 lakh 50,000 is your liability, advance tax liability, and till 15th June only 75,000 paid, no problem. Till 15th March, you pay balance 75,000. You did not understand. Let me tell you again. Your total advance tax liability after re-estimation came to 1,50,000. So what you paid in the earlier installments? 75,000. Now recomputation, you reach it to 1,50,000. Correct? So 1,50,000 minus 75, how much it comes to? 75,000 comes. So pay that 75,000 by 15th March. That's it. Suppose same realization you would have got earlier, then you would have accordingly paid the balance installments. That's it. Suppose example, you actually got the income after 15th March. Still no problem. pay by 31st March 100% of the advance tax. That's what I wanted to tell. Okay. But suppose the assessing officer, assessee did not compute the advance tax, but assessing officer computed the advance tax. He want to send you the notice because you are not paying, then he will do. Suppose if you are doing regularly, promptly, sincerely, then why will assessing officer involve? He will not. But you did not do. So under section 210 subsection 3, assessing officer decided that okay, I have to send notice and ask the assessee to pay the tax. Okay. So assessing officer should see, was there a regular assessment done before? Obviously, yeah. Assessing officer cannot send a first time income earner to pay advance tax, correct? So some regular assessment should have been done before. First point. So based on that regular assessment, assessing officer will see advance tax liability comes or not. So if assessing officer feels, yes, there is an advance tax liability, which assessee is supposed to pay, he'll compute and he will send notice. Correct? But wait. Notice cannot be sent after the last date of February. What I said? Notice cannot be sent after the last date of February. So last date of February in our previous year is 28th Feb 2025. So assessing officer cannot send a notice to the assessee to pay advance tax after February 28, 2025. Okay. Neither the officer can send a notice, neither the officer can send a revised notice. Okay. Okay. Now, first thing, to send a notice by assessing officer, earlier there should be regular assessment done. Second thing, there should be advance tax liability which assessing officer computed. Third, notice should be served before February 28th, 2025. Okay. And last thing I want to tell you that advance tax installments, how many installments come, that installment should be computed, and in writing the assessing officer should communicate to the assessee, serve a notice to the assessee that please pay the advance tax. So regular assessment should have been done, advance tax liability should be there before 28th February. Assessing officer should notice, it must be in writing, by computing the installments also. Okay. Now, if assessee is already paying advance tax, still can the assessing officer send a notice? Are already is paying na? Why will assessing officer send a notice? Sometimes what happens, the assessee is paying very less amount of advance tax. Then in that case, assessing officer will say, Are, you are paying very less. Come on. Actually, your income is this. So accordingly, you pay advance tax. So even if the assessee is paying advance tax installment, still the assessing officer have the power to send a notice to pay advance tax on the computation which the assessing officer makes. Okay. But just I'll tell you how assessing officer will do the computation. Let's see this point. Right? Assessing officer will see that a regular assessment is done or not. If suppose there is already a regular assessment done, so what is the income in the regular assessment? And after the regular assessment, in any previous year, did the assessee file return? So that return based income, regular assessment based income. See the two, and whichever is higher, that will be the notice amount which the assessing officer will send. Okay. Theoretically useful. Practically in exams they will not at all ask. Okay. Right. But if suppose assessing officer sent you the notice, that this is your advance tax liability and you pay. If you feel assessing officer is correct, he has given correct data, correct information, now it is better that keep quiet and make the payment. Then no intimation required. Simply assessee can pay the advance tax, that's it. Assessing officer feels that the income tax officer computed less. Actually, I am supposed to pay more advance tax liability. Will assessing officer object? If you pay more, assessing officer will not at all object. If you pay more, assessing officer will not at all object. So in that case, what to do? Assessee need not give any notice. Simply pay the extra advance tax what he wants to pay. And third thing, if the assessee feels that assessing officer computed more advance tax, but his income is not that much, maybe his sales have decreased, his revenue has decreased, so he feels that actually the advance tax may be low, then assessee has to give intimation in form 28A. Assessee has to give intimation in form 28A. Okay, and communicate to the assessing officer that my income is not that much, I'll pay low advance tax based on my understanding, my computations. Okay, that's it. If the assessing officer wants, he can even revise the notice before 1st March of the previous year. That means before 1st March 2025. I was telling na by end of February. Same thing in a reverse manner they give. Okay. So this is how the whole concept is. Now final part which comes, and that is interest under section 234A, 234B, 234C. What is interest under 234A? Suppose you did not file the income tax return on time. Then 234A section is attracted. You are an individual. You have to file return normally. No audit, nothing. Okay. Then by 31st July, you should have filed return, correct? Suppose you are an audit assessee. You are subject to audit. At least file the return by 31st October. And you are into international taxation. You are top. At least by 30th November, you should file. So whatever due dates are mentioned under section 139 subsection 1, 139, that okay, you are into international transaction, you are into international transactions, you have to submit a report under section 92E, no problem, we'll give more time, right? Till 30th November of the assessment year. In our case, 30th November 2025, please pay, file return, okay? If you are not into international taxation, only you are subject to audit. Then okay, at least till 31st October 2025. That means 31st October of the assessment year you file the return. You are neither into audit nor into international transactions. Neither your firm is subject to audit. Then at least file by 31st July 2025 of the assessment year. If you file the return on time, no problem. 234A not applicable. But if you delay, then 1% interest will be charged. Right? When I use the word SI here, it is simple interest. Okay? So SI means simple interest. 234A, simple interest, 1% per month or part of the month. What I said, 1% per month or part of the month. So suppose even 1 day delay, 1% interest will be charged. If 15 days delay, 1% interest will be charged. 30 days delay, still 1% interest will be charged. So 1% per month or part of the month will be applicable. Clear? Very good. Now I want to tell you that 1% from when? From your actual due date of filing return till you actually file the return. Suppose you are normal individual, 31st July is the due date, but you filed in on December 1st. Then what will happen? your interest computation will start from 1st August until 1st December it will continue. Okay, 1% per month. This is how they will calculate the interest. On which amount? The amount which is your tax liability as per the return. You filed the return, correct? As per return, what is your tax liability? Minus your TDS, TCS. You paid some advance tax. Okay, that also you deduct. Suppose you paid some self-assessment tax also. Maybe in the assessment year you did not file return, but you paid some self-assessment tax. That also you deduct. Okay. So when you filed the return, what is your tax liability? Minus your TDS, minus advance tax, minus self-assessment tax, minus TCS. How much balance amount comes? On that you should pay 1% interest. So that balance amount also you should pay, and 1% interest per month of default also you should pay. This is 234A. Okay. Yes. Now let's come to 234B. 234B says that this is if you did not pay advance tax, then 234B interest will be applicable. So till what time you should pay advance tax? Till 31st March of the previous year. That means for your exams till 31st March 2025, you should have actually paid your advance tax. But you did not pay. Then from 1st April of the assessment year itself, your interest under 234B will be applicable. Till what time? Till actual payment of tax. So in our example, I said till 1st December you paid the tax. You filed the return, you paid the tax on 1st December. So from 1st April to 1st December, 1% per month interest will be paid under 234B. Charged under 234B. Sir, 234 234A interest also you are paying. 234B interest also you are paying for August, September, October, November. The answer is yes, you have to pay. It's your default, correct? So you are punished. So that 234A is for not filing the return and not paying the tax. 234B is for not paying the advance tax. So the purpose of levying the interest is different. But in both the cases, it is 1% per month, simple interest. And if it is a part of month, also 1%. Okay. Now, similarly, there is another section called as 234C. Okay. Hey, 234B computation also same. What is your income based on that tax minus TDS, TCS minus advance tax paid, right? On that 1% per month will be charged. So in A or B, same way the computation goes, right? Whatever you are liable to pay as per advance tax, which you did not pay, on that only they will charge the interest, not on the entire tax liability. Okay. Okay. Now 234C, let us discuss. I already said to you that there are certain installments. What are the installments? If you are into 44AD, if you are into 44ADA, you file the return under presumptive tax basis. Then you have to pay 100% of the advance tax by what time? By 15th March of the previous year. That is till 15th March 2025. But if you did not pay, then 1% or part of the 1% per month or part of the month. That means now how many days left here? 15th March to 31st March only left, correct? So 1% interest will be charged under 44AD, ADA if you did not pay advance tax. Or suppose you paid less, then what they will do? They will say that advance tax actually liable to pay minus you paid, balance amount is there na, on that they will charge 1% for March month. That's it. Okay. Now, what about this installment concept? 234C installments are very important. Till 15th June you did not pay. Till 15th September 45% you did not pay. Till 15th December 75% you did not pay. Till 15th March 100% you did not pay. Then what will happen? Then 1% per month they said, but it is applicable to the whole quarter. Quarter means 3 months. Okay. Suppose till 15th June you did not pay 15%. Then 3% interest will be charged. They tell 1% per month. But actually for the quarter they will apply. So it will become 3% for sure. Right? Suppose you paid something, but it don't match with 15%. But you paid at least 12%. Then no interest is charged. But if you paid less than 12%, then definitely you have to pay the interest under 234C. And how much it is? 1% per month. And how much it will reap to? 3% for the quarter. And it is compulsory. Sir, I paid on August 1st. Till 3% they will correct. Okay? Right. Next. If suppose same is the case, if you did not pay by 15th June, 15th September, 15th December, and if you did not pay by 15th March, then only 1%. Why? In the previous year, how much left here? 15 days only. That's fine. Okay. So if you don't pay till 15th June, till 15th September, till 15th December, 3% will be applicable. But if you don't pay by 15th March, 1% will be applicable. And it is calculated for each quarter for the 3 times and for 1 month in the month of March. Like that, the whole computation of interest under 234C happens. Under 234C, like this, the computation happens. Okay, very good. Now, you understood how this computation happens. Now, the next section is 234F. What is 234F? It is actually fees for not filing the return on time. Now, interest is different, fees is different. So, interest is on the tax, fees is flat. So, this 234F section says that your return should be filed by 31st July. Yes? Yes. But did you pay? Did you file the return? No, you did not. So, you have delayed in filing the return. What is your income? Tell me. Sir, my income is 8 lakhs rupees. Okay, flat 5,000 rupees fees. Your income is how much? Income is 8 lakhs rupees. Flat 5,000 rupees fees. Sir, my income is 4 lakhs rupees. Okay, then 1,000 rupees fees. So if your income is more than 5 lakhs, 5,000 flat fees. And if your income is less than 5 lakhs, 1,000 rupees flat fees. Okay, this is what the fees under 234F. So let me repeat for all of you that if you did not file the return on time, then fees will be attracted. What is the fees applicable? After the due date, if you file the return, check your income. Income above 5 lakhs, 5,000 fees. Income below 5 lakhs, 1,000 rupees fees under 234F. So we understood all the concepts in advanced tax. I believe that it is very easy chapter. You would have understood every concept, right? If you're still not able to recollect, just go back and listen again. You will definitely understand. And in the next video, we'll solve all the problems in relation to advanced tax so that you get the confidence. Okay? With this, we'll end this video. Thank you so much. Bye bye, everybody.